Okay, this is a big deal. Do you see this handsome guy right here? His name's Vincent Rossi, and he's going to be partnering with me on the seminars. So you're going to start seeing his smiling face a lot more, and we're just going to have more help putting this together and bringing you better programs and keep this going strong. So Vincent Rossi will be partnering with me. He may even be hosting next year a couple times. So give him a warm welcome, Vincent. He's also with Keller Williams Realty. And then these two delightful ladies are really, they're the bosses. So we've got Vanessa, operations manager, and we have Carrie Bittner, listing coordinator, admin, and seminar setter-upper extraordinaire. So you know Carrie, get to know Vanessa, get to know Vincent, and we'll get this show on the road. So thanks for coming up. I'm excited. Okay. Well, you know, this happens every time we host this topic. And it's so funny because every time we leave after discussing reverse mortgages, people always say, I'm so glad I came. This was one of the best ever. But people think a reverse mortgage is like a dirty word. So I'm not quite sure what that's all about. But we're here to dispel some of those myths that you may have in your mind. It's just a misunderstood financial tool, basically. So I'm glad you're here. Again, I've introduced myself. We're going to talk about reverse mortgages, what they are, how they work, and the real ways that they are helping homeowners today. And I'm joined by two of my faves peeps, Martha and Marty, and they are both very experienced reverse mortgage professionals. They've helped hundreds, maybe even thousands of people use their housing wealth as part of a smart retirement plan. So we're going to break down the facts, we're going to clear up a few misconceptions, and share some real stories, which I think will be fun, about clients who've used reverse mortgages to improve their financial flexibility. So really, before we get going, I just want you to get to know these two wonderful people a little bit. Marty, who are you?
Hey.
How long have you been doing this? What did you maybe do before? And maybe tell us one thing that we don't know about you.
Hi, Dana. Thanks a lot. I'm Marty Apple, reverse mortgage specialist with Mutual Omaha Mortgage. And I've been in the reverse mortgage business for about 22 years right now. And I worked for Chevron before that in the marketing department. So retired after 37 years with that and decided to go ahead and continue on to contact people. And I've enjoyed this. So looking forward to tell stories about how people have used this morning.
And what do we not know about you?
Excuse me?
Anything that we don't know about you?
What they know about me?
What's something we don't know yet?
Something. Yeah. Well, I was just talking to Joe about one of the things that I used to do, don't do it anymore, but work with hot glass. And as a glass artist, I worked with an artist in Berkeley and did a lot of work myself. So that was a fun activity. But after working with 2,000 degree glass, and it was a fun time. Yeah, enjoyed it.
I've seen some of them on in pictures, and so I just invited myself over to Marty's house sometime during the holidays so I can come see some of his artwork and maybe have a glass of wine with him. And are you hearing him okay? Would you put your microphone right in front of your mouth there?
Is that better?
Better.
That's
better.
Okay.
Better. Thank you.
All right.
Thank you.
Sorry about that.
Because you're kind of soft-spoken with that cute
Okay.
Kentucky accent. Martha, who are you?
Hi, I'm Martha Eccles. I've been a reverse mortgage advisor for 21 years. Before that, I was in branch banking since I was 19 years old. In 2002, I was a bank manager, and someone came into our branch and trained my staff on reverse mortgages. So I took him outside and I said, look, this seems so perfect, because I knew how sometimes seniors were struggling. And he raised his hands and he's like, Martha, I don't even know if it works. I just started. But 2 years later, he was so busy that he came to me It invited me into the industry, and it's just been life-changing to be able to help people achieve what they had hoped they would have in retirement, but kind of had lost hope. So something crazy about, maybe you don't know that I have a little dog named Stella. She just turned 4. She's a Yorkie poo. And Stella and I are in competition for my husband's attention. She's right on his lap anytime I'm home.
That's cute. All right. Okay, well, let's start with the basics, shall we? A lot of us have heard of reverse mortgages. We see ads on the TV, hear them advertised on the radio, if you still listen to the radio, but not everyone knows exactly how they work. So, Marty, can you walk us through what a reverse mortgage actually is?
Yeah, good. I'll be glad to. Really, a reverse mortgage it's really designed as a financial planning tool to help improve your budgeting needs and help you with that and help you manage your finances a little better. The basic difference between this and a traditional mortgage, how many of you have a regular mortgage on your property? So what that does, it provides you to be able to pay off that mortgage into a reverse mortgage with no monthly mortgage payment. That's the key to this. So you have to pay your taxes and insurance, but you don't have to pay that principal and interest payment, and that's the key element for what the reverse mortgage does.
That's awesome.
You keep ownership to the property, just like that mortgage you have right now. That's just you still have the title, and then as owners to the property, you pay the property taxes and insurance, but the principal and interest is not required to make that monthly payment. So
Awesome.
that's a
awesome.
good thing.
So it's still their home. It's just a different way of accessing that equity that they've already built up, right?
Exactly.
So that leads us right into our next question. Why do reverse mortgages get a bad reputation? What is up with that? Where does that come from? What has changed over the years? Martha, you've helped a lot of clients through this process, and people sometimes have concerns, right, when they hear the words reverse mortgage. And where does that come from, and how are things different today? Yep. You know what? Let's turn that
That's
on.
me.
All righty.
A lot fewer people have that thought process today because the reverse mortgages have evolved over time. But the original reverse mortgages, there were a lot sold in the Bay Area in the 80s. And with those loans, the lender would actually go on title with the homeowner. And then as the years went by, when the loan was repaid, the homeowner had to pay the mortgage, the funds back that they borrowed, plus interest, plus 50%, and I've even heard as much as 75% of how much their home appreciated. And if you remember the 80s, an example is we bought our first dumpy little home in the worst part of Hayward, between the BART tracks and the cemeteries behind Kmart. In 1984, but it's what we could afford. And within 5 years, that home value doubled. So we were able to sell that house and move to Contra Costa County. But for people who had reverse mortgages of that type, the senior or their family, it was just a nightmare. So there were a lot of lawsuits. But in 1987, under President Reagan, Congress voted to have FHA create a reverse mortgage that is secure, has many consumer protections, and the first and most important is that the lender doesn't go on title.
And can I just interrupt? What's FHA for those of us that don't speak lender lingo?
Thank you.
Sure.
Keep me honest. That's the Federal Housing Administration. That's administered through the Department of Housing and Urban Development. And many, I know myself and my daughters, we all bought our first home with an FHA loan. HUD also administers the VA loans. So these are government-backed loans that help us achieve homeownership, and through the reverse mortgage, help seniors access some of the equity they've built up over time.
Does everybody here know what HUD is?
Department of Housing and Urban Development.
All right.
Thank you.
I just got to watch
Keep me
you.
honest.
I know. I got to watch you like a hawk. I'm telling you. Do we have 4 myths that we want to discuss?
Well, the number one myth Marty already touched was that the bank, if you do a reverse mortgage, the bank does not own the home. Okay? The number 2 myth is people think if they do a reverse mortgage that there will be a time when they have to make a repayment. And that repayment is not due until you sell your house, you pay, you move out permanently, and if there's 2 people, then it would mean if both of them passed away, or you turn 150. So whichever comes first, the loan is due. So it gives you that assurance of knowing that you'll always have this home, you'll always have the flexibility to do what you want, but you are required to stay in your home as your primary residence. So you can't turn this into a rental.
Did I hear you say when we turn 150?
Yeah, it's on the contract.
Okay, I'm just checking. I just want to make sure my ears are still working.
Yeah, FHA really wants to make sure that this loan does not come back on the senior. And it's considered a non-recourse loan. So that might be a term you may have never heard of, but it means this loan has no personal liability for the homeowner or for their heirs. So since you're not making a mortgage payment, you can make payments, but assuming you don't make a payment, like almost all of our clients don't make payments, that loan balance will slowly grow over time. And if you live there a long time and you've borrowed quite a bit of money, there's a possibility that maybe that loan balance is more than whatever your house is worth that year you sell your home or pass away. And if there ever is that situation, which doesn't happen very often in California, but if there ever is that situation, you're not responsible for that shortfall, or we call that a deficit. So in that situation, neither would your estate or your kids be responsible for that debt because the loan is insured through FHA. So those are the primary things that people have misunderstandings about a reverse mortgage.
And then I think people think there's just one reverse mortgage.
Oh, right. So in recent years, there's actually several types of reverse mortgage. Marty and I, what we're discussing today is what's available at Mutual of Omaha. We are not representing every reverse mortgage you can find by Googling, okay? So I don't know those terms. But at Mutual of Omaha, besides the FHA insured reverse mortgage, we have our own proprietary reverse mortgage. And that can be used for situations where maybe the FHA loan isn't the best option. If someone has a very high value home and they want to borrow more than what FHA restricts it to, we have an option. Mm-hmm. It also works for some homes that maybe don't meet FHA requirements. For example,
what home wouldn't?
Well, right now, Rossmore. So if you're familiar with Rossmore, they have co-ops which have never been eligible for reverse mortgages, and they have condominiums, which for many years we did a lot of business in Rossmore. But if you know that Rossmore's insurance is a little bit out of sorts right now. So FHA, along with many lenders, are not lending in Rossmore. But with Mutual of Omaha, we have a secure equity, our own reverse mortgage product, and I'm very happy that we got this approved for use in Rossmore. So it's a really nice complement to the FHA loan because we can help more people achieve whatever they're trying to do.
Oh my gosh, that's great. I know you've worked really hard with Rossmore for many years.
Yeah, I love it.
Many years. Yeah.
It's beautiful.
Okay, well, all those are really important points, as you can hear, and not all reverse mortgages are the same. And who you work with really matters. Now, you just mentioned you're really only talking about Mutual of Omaha, but before you both worked at Mutual of Omaha, you worked at other companies that provided reverse, so you know more. You know more than you're letting on here, right? Yeah, you do. So let's unpack this a little bit more. Martha, can you now dig in, like dummy it down for me, right? But dig into the different types of reverse mortgages and when one would be used over another.
Sure.
Okay.
So the FHA insured program is best suited about 75% of the time. But we always show and explain to clients all of their options. And so it's important when you're looking for a loan officer that it's someone who has a menu of programs for you, because what we have to do is we have to customize and tailor that product or that program to what you need. For example, not everybody wants to draw out $400,000. You may only need $2,000 a month. Well, it's important that the loan officer listen to what you need and structure the loan according to what you need. Maybe you're using the reverse mortgage to buy a home, and if that's the case, then it's a little different, and we have to make sure we're explaining it to you. I can tend to ramble on because I love this program, but there are, traditional mortgages. We call them forward mortgages. I've never done a forward mortgage, but they're pretty complex. Ours has its own complexities as well, so that's why we kind of stay in our own lane and specialize in reverse. But sometimes a mortgage loan officer may do 65 different types of loan, and once a year they do a reverse mortgage. Well, there's sometimes they make a mistake, or maybe they misinform the client. So it's nice that everybody who's interested in a reverse mortgage has to talk to a HUD-approved reverse mortgage counseling agency to make sure they have the actual facts. Marty and I have at least 2 trainings every week. We work in the reverse mortgage department at Mutual of Omaha, and we have like the world-class processing and training, so that when we speak, we're giving the most up-to-date information.
Yeah. Are you going to talk more about the counseling?
Yeah, counseling. So this counseling that is required, it's really important because we want to make sure that people who are considering this type of loan, that they're fully informed and that they understand. So, it'd be very easy for some shyster to talk to a 92-year-old lady and promise her everything and just give her something different. But because of the counseling, the counselor wants to make sure that lady understands what the reverse mortgage really is. And if she's not capable of that, meaning, maybe she has a little bit of aging or cognitive decline, then we would work with the person's power of attorney. So we really want to make sure that everybody on board is fully informed, and we try, if the homeowner's willing, we'd be happy to speak with their attorney and their financial planner, because we want this piece of the puzzle, this equity, to be used for its best purpose to complement the whole plan you already have laid out.
Well, and not that any of us here know any of these people, but there can be some naughty adult children that are pushing mom or dad to get a reverse so that they can get their grubby hands, did I say that, on mom and dad's money. And so the counseling is important. I almost wish that the counselors would come to the home.
Yes.
Because you just got to be careful, right? You just got to be careful. Ugh, okay. This is all very good stuff. But it is worth mentioning that nobody should use the funds from their home equity to invest in the stock market or other securities. I don't know if you mentioned that or not.
I have not, but that's really important.
Yeah. And why?
Well, you wouldn't want to borrow money. It's not like you would go to the bank and do a cash advance on your credit card, right, to go put it in your savings account. It's more prudent to only borrow money when you actually need it. So if you borrow from a reverse mortgage and you put it in investments, that money might be locked up or that money might be at risk. So it's safer to just use the reverse mortgage money when you need it. And with the FHA insured program, there's a totally built-in growth factor for the line of credit. So I was talking to a customer yesterday, after paying off their mortgage, getting a new car, supplementing their income, they'd still have $200,000 left in a line of credit. And they were relatively young. They were 67. So we talked about they may not need more money until they're in their mid to late 70s, or if they had a situation where they needed in-home care. So I showed how that $200,000 line of credit in 10 years would be about $430,000, because FHA has a built-in growth factor to encourage you not to borrow the money until you need it.
I think that's why, and I'll talk more about my personal story with reverse mortgages, but I think that's why it's better not to borrow the whole lump at once, right? Because you've just lost that ability to have that growth. I mean, they just doubled their money in 10 years.
Tax-free.
Tax-free. Where else can you do that?
And there's no risk. It's just, I guess the basic concept of this program is the older one gets, the more you can borrow. That means someone 62 is going to be able to borrow a lot less money than someone 92. But
different programs have different caps, right?
Right.
Right. So you guys have a new jumbo
That's
loan.
right. Our secure equity is as young as 55 years old. But it has the same principle of a younger borrower may not pay us back for 30 or 40 years, so they don't get to borrow as much as someone who's maybe 92. Okay. So instead of doing a reverse mortgage and every year the lender knocking on your door like, let's refi because you're a year older, which is very costly for you, FHA says they have this built-in guaranteed growth factor so that over time what you do not borrow will increase so you can borrow more later. Because like one of my clients said when she was facing some very serious life-changing health issues, she said, I think I probably have 3 years, Martha, but the care that I need, she said, it's expensive getting out of here. Those last few years could be really challenging.
Yeah. Okay. And I think they should be warned that actually just like any loan, if you've got a normal forward loan on your home, right, a mortgage on your home, you will hear from other companies saying, oh, it's time to refi. And it looks official. It looks like it might even be coming from the person that's servicing your reverse mortgage, just like you get these if you have a mortgage on your home. You get these, people want to make their money on refiing. You can refi a forward normal mortgage loan, and you can refi a reverse. So it costs money to refi.
Yeah, and sometimes it may be worth it. Marty and I would do a full analysis for you. If you're able to access an extra $80,000, it may be worth it. But to get an extra $5,000 is just a money maker for the lender.
Right, exactly. So you got to always think about who's making money on this anyway. Marty, let's talk about how age affects these loans. How does your age impact how much you can access?
Yeah, well, we covered some of that earlier, Martha talked about, but,
Yeah.
The older you are, the more money you're able to get. And that again increases each year. So it's good that you can put that aside and take advantage of it later, but you can take advantage of it today. And as Martha covered, during that growth factor, you're getting some of that money right now, and you can't get a return like you can with the growth factor on the mortgage too, because that's right now it's running somewhere close to 8%. So you can't get that anywhere else today. but take advantage of what that can do for
Did
you.
you just say 8%?
Huh?
8%?
8%.
Get out of town.
So that's the money that you would have in your line of credit account, that would grow for you. So you're either going to pay off part of your mortgage or pay off your mortgage rather, but also the additional that's left over. If those of you don't have a mortgage, then that's good because you got money that's going to go into your line of credit account. So while you may not need it today, I've got clients that all of a sudden they have a life-changing event, and that's why they have that line of credit account to be able to take advantage of some of that money later on.
So can you set up one of these reverses and not use it yet? Like
Definitely, yeah.
not touch it at all?
That's right.
Wow.
And that's one thing that some financial advisors are advising their clients to do is to prepare that rainy day fund to be available to do it later on. Go ahead and set it up right now while everything's calm, but then to take advantage of that later on.
I have a question.
Yeah.
Well, I have two questions. Are there any maximum ages? Like if I'm 102, will you still let me open a reverse mortgage? And I am going to be 102 someday, by the way. I am.
There's no maximum. We do make all of our calculations based on age 100, but I've got clients that have taken advantage of it when they've just got a couple of 3 years left, and
Nobody knows how
and
many
they're
days.
they're still living, past age 100. But it works.
Good. That's awesome.
Yeah.
I had another question. Go ahead, Martha.
One
Yeah.
time I met with a lady, she was 102, and she says, I don't think I'm old enough yet. Give me a couple more years. And at 104, we did her reverse mortgage.
I love that. So the program grows with you. You can use it as a financial tool, right, to grow your money. And then the older you are, the more benefits you can unlock. I love that flexibility. That is awesome. So let's get more real with some real life examples. We know stories help bring facts to life. And Marty, I'm going to ask you first to share an example of someone who has used a reverse mortgage in a very meaningful way. How's that impacted their life?
Say that last part again.
How did that impact their life?
Oh, well, the good thing by being able to say, okay, I'm sorry. I've got a client that had a reverse mortgage for about 5 years, and they, as they got older, they decided that that big home was not suitable for them, and they decided to downsize and looked at other properties. They ended up getting a townhome and able to make life a little easier for them, and got rid of the big house. But we also had another reverse mortgage to use the reverse for purchase, as Dana mentioned earlier, to take that and be able to purchase a home. They sold their other home, and we paid off the reverse mortgage with the sale, but also had money left over that they could use that as a down payment for a townhome, and being able to make that adjustment then without having a monthly mortgage payment, which was key for them. So they had all of that settled up, and it was a good move for them to be able to do that. Yeah.
I had a really fun experience. I was working with a lady, and she had never owned a home. And she was in her late 70s. She had some health issues, and she had just come into some money, an inheritance. And she told me exactly what she wanted, like exactly. We went out the first day. I had 5 places lined up. We walked into home number 3, and she started to cry. And I said, and there's somebody else in the audience that I think did that too, maybe.
No pointing fingers.
Anyway.
Someone found their dream home.
Yeah, their dream home, exactly. So she started to cry, and I said, are you okay? This is my home. Anyway, she got to buy her first home in her entire life in her late 70s using a reverse mortgage. Yeah, because she only had about 200,000, but with the reverse, she was able to buy a home that was closer to 400,000, and it was life changing for her. It really was. Martha, I know you've seen some powerful situations also. Can you share one that really stands out to you?
Well, I first have to say my own mom was a realtor, broker for 30 years, and at 79, she finally retired and moved closer to family in Roseville, and it would have only been possible with our mortgage because she didn't want to pay all cash for the Roseville home. She wanted to keep her investments intact. So she bought the house she loves. She has no mortgage payment. She finally doesn't work anymore. And her investments have done well for her. And I think primarily she doesn't want to rely on us four knuckleheads to take care of her in the future. So having that money at her fingertips has meant a lot. Can I share one more?
Yes.
Okay.
Oh, yeah, I like that.
So, yeah, I met a couple in a very affluent neighborhood. He was still working at 75. They had a mortgage, a second mortgage, and a third mortgage. Yeah, his wife had cancer for a long time, and he continued to work to try to make those payments. They had basically borrowed money on their home during that period of time. So when we met, we were able to pay off their mortgage, the second mortgage, the third mortgage with the secure equity because the home was worth like 3.2. We set it up so their property taxes and insurance are going to be paid for each year for their life expectancy. And they had $100,000 cash out to help clean up their credit card because they had, to be honest, they had the stigma of reverse mortgage. So instead, they continued to put themselves in debt to the point of foreclosure. So once we were able to come in and clear it all, clear their misconceptions of it, it just made sense to do that. And now they'll live in that 3,500 square foot home for the rest of their lives, and he can retire. So that's one of my recent happy stories. Yeah.
Thank you. Anything? We already talk about the Rossmore condo owner purchases? Purchasers?
We also now have reverse mortgage for Rossmore condominium. Yay, that's a big deal. So that means right now I have a client's, they're actually quite affluent, but they wanted to use some of the equity in their home to gift their children. So they were giving each of their kids a certain amount every year for the next 4 years because their children have kids in college. And it doesn't affect my client's budget because there's no mortgage payment to it. And I have another lady whose husband passed away in January. And she thought, I'm going to have to sell my house and downsize into a co-op, because she had a mortgage still and really didn't know what to do. So she even listed her condo, and it didn't sell for the price she was asking. So we're doing a reverse mortgage so she can actually stay in her home. And we're paying off her mortgage, and she's going to have a couple $100,000 to supplement her income since the household income dropped. And it was cute because after she had staged it, she had to clear out all the stuff that she was dreading doing, right? So she staged it, and she looked around, and it was painted. She goes, I really love this house more. I don't want to go. And so that's a happy story for her from the harsh circumstances that she was under.
And I think maybe a misconception from people about reverse mortgages that this is only for people that have no money, but that's not true. Mm-hmm. So you're hearing that today. We worked on the Smiths together. Mm-hmm. So I was called by two different people. I was called by the Smiths financial advisor and a forward lender. And they both called me on 2 separate days saying, we have a couple that we want you to talk to because we think you're the one that's going to be able to help them. Okay, what am I getting myself into now? So I drive up to their gorgeous home in Release Valley Road in Lafayette, way up the hill, way up the hill. Just gorgeous, very special place. Amazing view of this whole valley. And I thought, wow, these guys look like they've got a lot of money. I mean, it's very impressive. A pool, a huge deck, etc. Well, you know, things aren't always as they appear. We know this, right? Things are always shinier on the outside, maybe. They were a little embarrassed to share that their lifestyle, they'd been sort of outliving their lifestyle. They had been going to Mexico every year, multiple times a year. They invested in art. They had gorgeous things in their home. They were running out of money. So that's why their financial advisor called me saying they don't want to admit it, but the cold, hard truth is they will run out of money in 6 months. And they don't know what they're going to do. And the home had gotten to be too much for them because their driveway was about this steep and it was about 1/8 of a mile long. They had to walk down or drive down to get their mail. So that wasn't working for them and they were running out of money. And so what we did was we sold their home, which they loved, and we helped them buy another home, less expensive, had the views that they wanted, no stairs, and they purchased it with a reverse mortgage for purchase. So they were able to put money in the bank. They paid off all their loans. They had money if they still wanted to go to Mexico for a trip, right? And then a couple years later, the husband passed away, and the wife was set, and it's really a blessing for them. Is there anything else you wanted to share before I tell them my personal story?
Nope.
Any other stories that you had?
Do you want to talk about the people who used it for home improvement?
Yeah, I think
That's key.
typically is what people would be using a reverse mortgage for. Some of the deferred maintenance that needs to be handled, so they can live more comfortably. Had a client that had a reverse mortgage, and he wanted to improve the home, needed some new windows, wanted to get some soundproofing with new windows, and then the house needed to be painted, needed a new roof, so all the basics to get it done. But we were able to refinance the loan with a reverse mortgage, and then use the extra funds that he got by doing that to handle the new roof, get some painting done, and also to get the windows installed. So, he accomplished everything that he needed by being able to use the reverse mortgage. So, it works. It works for people. He didn't have any heirs, didn't have to be concerned with anything like that. But he was able to enjoy his life a lot better, more comfortably, and all the new windows give you some better insulation, and also it really worked.
I love that story because it's like, let the house pay for the house repairs.
Yes.
And the house repairs improve the home's value. So it's
Yeah.
kind of like a win-win-win. And financially, on
Perfect.
a month-to-month basis, he was even better off.
He was better off, yeah, because he didn't have that extra expense that he had to take out of his pocket. We used what the growth in the equity of the home, but was able to do that. And then he had no monthly mortgage payment, which was pretty cool. Yeah.
Well, I'm going to tell you a story, and this is about my sweet mom, and how a reverse mortgage was just a huge part of the happiness she had in her last days. It started when she started to, as her doctor said, have a hitch in her get-along, and she had to get a new hip. All right, that's fine and dandy. Then huge, the house I grew up in Moraga, huge pine trees everywhere. She had to take, Monterey pines, they don't last forever. I think they're only supposed to live about 40 years. So we had some that were leaning into the neighbors. And it was keeping her up at night because she was worried. The neighbors were worried. And that was almost $20,000 to take down those darn trees, which were gorgeous, but they were on their last legs too. They had a hitch in their good long. So she got the new hip. And then we decided, 2-story home I grew up in, we needed a chairlift. $12,000 later. And then we really looked into reverse mortgage because I've known these two. I'm like, well, I've got to talk to these guys. When my brother and I started critically looking at my mom's kitchen, because you were talking about repairs and updating to make the home usable. My parents had a gorgeous home. It was a 5-bedroom, 3-bath home we'd lived in since 1967. But my dad passed away like 25 years ago. And then my mom's health sort of started declining. She hadn't been keeping up the home. I mean, it just happens. You're busy living. You're just getting through your days. My mom was active. She was going to garden club and, but she had her things she did. But my brother and I said, well, Mom, why don't we have Thanksgiving at your house? Only 2 of her 4 burners worked.
Yeah, right.
Only 1 of her 2 ovens still worked. And you're not supposed to be able to move and pick up the tile around the sink. It's not supposed to be, it's not supposed to move. It's supposed to be in there permanently. So she needed a new kitchen. And my brother and I look at each other. We don't have $50,000 to $80,000 to hand you. I had kids in college, et cetera. So we looked in the reverse mortgage. So we got a HECM. And again, share what a HECM is, one of you.
HECM, the home equity
Home
conversion
equity.
mortgage. Conversion, home equity conversion.
Conversion mortgage, yep.
The FHA insured product.
Yeah.
Yes.
Talking about.
This was the key. So my mom had lived in her home for 56 years. And she had said that her wish was to, the politically correct term is age in place, which we know means we're staying put, we're going out feet first, whatever you want to say. We want to stay in our home until, our last days. This gave not only my mom, but my brother and I such peace of mind because we wanted to know that my mom was healthy, safe, and happy because we adored our mom. Of course we did. So she was relieved, we were relieved, and we did do. So we got all that in place for the reasons I already told you. Well, then one morning she woke up and she calls me like at 6 o'clock in the morning. My mom doesn't get up at 6 o'clock in the morning. It's like, what's going on? I don't feel right. Well, she had a stroke. So she was in the hospital for a few weeks, came home, and guess what? Well, before she came home, we knew she was going to be in a wheelchair. So the whole world changed. You don't wake up one morning thinking, well, I guess today is a good day to have a stroke. Why not? So before she came home, because we had that reverse mortgage we could access, we redid the whole downstairs. Because again, remember, 2-story home. So I turned the dining room into a darling bedroom. We ripped out the carpet because we had, carpet everywhere. You can't roll a wheelchair or walk with a walker very well with carpet. You know this. Ripped the carpet out, and her beautiful hardwood floors were underneath. We widened doorways. We moved walls, and we turned the downstairs bathroom into a wet room where she could zoom in on her wheelchair. She could put her wheelchair underneath the new sink and still wash her face, do her makeup. We ladies have to be able to do these things. And her caregiver could kind of wheel her in and wheel her out of having a shower. And we moved the toilet because there's certain, you want a certain amount of inches, I think 36 inches around a toilet for wheelchairs and walkers and such. What a blessing. What a blessing. She was able to come home. We redid that bathroom in 16 days.
You got people.
I've got people. I know people. I've got people. What a blessing. She was then able to cover the fees for her care. We were able to buy the medical equipment, Hoyer lifts. We got an electronic Hoyer lift. Okay, that's $20,000. We had 2 people during the day and 1 person live in at night. $24,900. I know I've shared this with you before. A month, people. $24,900 a month. She was able to live in her home until the last day. And we were able to help her do that. And, you know, that's a blessing. It's just a blessing. So that's my story, and I'm sticking to it. There you go.
Beautiful story, too.
Yeah, but it's real, and it changed her life. Really, it helped the last years of her life be very, very meaningful because she was able to stay in her home, feed her birds and the bird. You know, it was important. Yep. Okay, Martha. Yeah. What happens to someone? Kind of walk us through this. What happens when someone moves out and sells their home or passes away? Now what happens?
Now what happens?
All right.
So there is a special clause that if someone had to go to a care facility, there's no effect on the reverse mortgage as long as they come home within 12 months. So I use the example, let's say you're on a cruise and you're dancing and you both fall down and break an ankle. Well, as long as somebody comes back home from the care facility within 12 months, there's no effect on the loan. So typically, in my experience, if a client sees the fact that they're not going to be able to come back home, they usually want to sell their house right away because that's going to be the source. The equity in their home is going to be what they're going to use to pay for the next place they live, assisted living or independent living. So just so you know, if you had to go to the hospital or the doctors or whatever, you're not kicked out of your house. But when you permanently leave the home or you pass away, then the loan is due. Okay? At that point, your family, let's say if you passed away, your family would have 6 months and sometimes up to 12 months to settle that debt. They don't have to sell the home, although most families do because their adult children already have their homes and their lives elsewhere. But most families will sell the home, the reverse mortgage gets paid, and they get the remaining equity. It's the exact same mechanics as if a regular mortgage or home equity line of credit was on the home when someone passed away. But in the situation, let's say 2008 were to happen again, where home values dived dramatically, not so much here, but let's say East County, for example, home values dropped in half. At that point, if someone sold their house or needed to move out, if their mortgage had been there for a long time and it was exceeded what the home's value is, what happens? I told you earlier.
Yeah.
If the house is not more valuable than the mortgage, FHA insurance will step in and pay that shortfall, so there's no burden that passes on to the children. And it's the same with our Mutual of Omaha Secure Equity. It has that same consumer protection.
That's amazing. No, that's amazing.
Yeah.
Really. Because all the people during the crash, 2008 happened, and then 2009, 2010, real estate prices around here were not what they are today. Let's just say that.
Okay, we'll keep it at
right.
that.
So if you'd had a forward mortgage, you were considered a short sale, right? A short sale, because your home was worth less than what you owed on it. That was not fun for anybody, right?
Yeah. And in that case, the family can either sell the house at 95% of what its appraised value is, or I had a client, his son was in New York City, so when his father passed away in 2009, this was the situation. And the son just had the property swept clean, removed the contents, handed over the key, and he signed the deed in lieu of foreclosure. So son didn't have to come up with any money. The client had the money he needed for care when he was alive. And then we took the property, it's sold, we get repaid, and whatever shortfall FHA pays us.
One other cool thing, and this happened to my mom too, but prices here are staying stable. So if anyone, either any of you or maybe you have friends or family that has a current reverse mortgage and maybe you got it many years ago before the home prices have continued to increase, you can refi. And we did this for my mom. We refied, and because her home had gone from, I think the first time we got a reverse mortgage, it maybe was worth 1.7. Well, when we refied and we got it, you have to get your home appraised, just like when you get a regular loan. They send out an appraiser. It had been appraised for 2.3. So we got to squeeze out a little bit more money from her home, which was really cool. Really cool. So I think that's important to know as well.
It works.
Good stuff. This is good stuff. But again, like anything, we're not selling you on this. We're educating, right? Because the goal of these seminars is to engage, educate, and empower you to make the right decisions for yourself. Nothing is right for everybody. We know this. But it's just good to know. It's another kind of tool in your toolbox that you could access if it's something that could help you in your life or your family members. So the family stays protected. Remaining equity stays with them, goes to the heirs, goes to the beneficiaries. That's very reassuring. Is there anything that we have forgotten to ask you? Anything you want to mention before we do our little raffle prize? And then we're going to get to your questions, because I know somebody came up and said, I've got some really basic, silly questions. There's no silly questions, because this is not what we do every day of the week. We don't work with reverse mortgages, but every question is a good question, because if you have a question, that means somebody else in the room has the same question.
I just wanted to say that no lender should make you feel like you have to do this. So if someone's putting any kind of pressure on you, that's a sign. Maybe bring your friend, neighbor, someone you trust into that meeting so that everybody can learn together, and you can decide if this is a great option for you or not. Sometimes selling your home. I had a client, I always ask, does your house fit your needs? And sometimes it's too many stairs, too much maintenance. And really it's better time to downsize, to find a place that really suits their needs, where life is carefree. And so I always encourage them, well, that's better to do that sooner while you're younger than to wait another 10 years when that whole process gets harder.
Yeah, that's a good point, Martha. I think getting people while you have the ability to make some of those decisions in a comfortable way, and not until you're pressured to do something, is to try to do that now instead of later, because it can pay for you. You can get that growth in the money that you get now if you don't use it. We talked about that earlier, to be able to do that now instead of later. So it works.
Well, okay, we've almost used up all our time. So if you take away one thing today, one thing, it's that reverse mortgages have evolved. They are flexible, they're secure, and they're a great financial tool for the right homeowner, okay? If you want to learn more and talk about your goals, what you're trying to accomplish, talk to an expert. You've got two right here. Let's thank Marty and Martha for their time.
And
Yay!
pick up.
Thank you. And next month, the holidays are sort of romantic. Next month, the topic is, are you ready for this? I've never presented on this, so hold on to your whatever, but love has no age. A boomers and seniors guide to dating, intimacy, and connection. You will not want to miss this.
It'll be packed.
So go and have a great day, and we'll see you next month.
Yeah, stop by the table out front. There's pick up one of the bags to put all your material in, but also plenty of material to get more information on what you need, the questions you have.
Thank you.